Hey guys, how are you? Francis the Market Sniper and the Crypto Sniper. So follow me for crypto specific feed on at the Crypto Sniper. At the Crypto Sniper. We are looking at Ethereum versus Bitcoin. This is Bitfinex. So obviously there's a variation across exchanges, so bear that in mind. So if my price doesn't exactly match what your price is right now, understand why that is. The different exchanges do have variances depending on who's chasing the market down in any given market. You also get big geography changes. There's differences. The Japanese price for Bitcoin is notoriously a lot higher, but there are levels of entry to be able to arbitrage that. So anyway, that moot point aside, so this is the structure we have finally settled on. You may recall that I warned that we were in a threat period during this grinding and that it could be a downside move, and that it's more advisable to be off risk during this grind and then later this churn. What ended up happening is this grind went on for a lot longer. Slowly the risk reduces with time, and then that break of the grind line, and you'll have to learn HVF theory and method for that, but just understand that's what we call a grind line. That break of the grind line did come, and it was very moderate. It wasn't a major capitulation, and in fact all that happened is we continued to tighten on volatility, but we went from a grind up into a horizontal, what we refer to as funneling, which is in between the top funnel and the lower stop level funnel. So these are the three critical lines in that essence, that little channel. But as we already had, we were now clearly going to get an upside. So as this moved, and then I was watching this as it started to go impulsive up, I said, that's it, that's the final point. We managed to get in and around the 9.5s, 9.4s, 9.5s, prior to the official break, which was at the 9.6s level. So we're fortunate there. So that breakout from the low volatility was the final giveaway. That's the triggering event, that this was no longer to be a sell-off. With the expectation that I originally had that this impulse was relatively small and was quite flat because of that big sell-off support coming in late there, and the expectation that it would be a sell-off. When you end up getting something that is more bullish then, you would traditionally expect that starts to indicate that the direction would be something else. So the confidence for the bear scenario started draining away when this was not a particularly strong capitulation, and then we continued to hold a level and the time continued to run out, but meaning the risk was actually reducing. It was particularly vulnerable in this early stages where we would have had another flat bottom breakdown over here. The fact that this low was a lot higher up from here means that this pattern was becoming more symmetrical. So those of you that will say, you were wrong. Yes, we were on risk of a potential breakout. So we had closed our Ethereum longs, which we had enjoyed from there, and got out in this funnel, this downside funnel on the smaller time frame, just sub the ones. And then since then we'd watched it come down, and that's when we started to worry. We've had examples on Ripple and others where these would have been down breaks, but Ethereum held up when it could have been and should have been spilling. So that then implied relative strength, and when the break came, it broke to the upside. And the key thing is flipping. Some people on Twitter were surprised to say, wow, you're long Ethereum now. Yes, so the minute the price behavior starts indicating anything that is not in line with your expectations and starts implying relative strength, you must show the dexterity to change quickly. Emotionally, people see that as a U-turn and see it as a negative. In trading, the non-emotionality and the preparedness to switch opinion is actually far more of an attribute rather than a negative. And the fact that we were off risk during this high risk period, and some might have carried it all the way down and all the way back up, and we ended up getting back in the train over here when we got out up top here, just sub the ones. We've left nothing on the table in terms of this move. And more importantly, we were off risk during a potential fragile period that was showing up to be fragile. So I know some folk will say, well, you missed out. I don't believe that to be accurate. But that's not just someone trying to save face either. We weren't right about the scenario cost, and the price behavior quickly shows you when there is relative strength. Generally, we've been long and bullish Ethereum against Bitcoin as a whole. Anyway, the key points as we ran this second interim, note the lovely confluences with the fibs. You just run the high, and that was the 100% level, and it was also our second interim. So the geometry, how it's set up, you had a little dip of a pullback. We didn't churn for nearly as long as we might have, and that then indicates that we're probably going to run for the finish line then. If we're not even going to have a big break and a pullback here, which I thought was possible. Remember, this was still a low slung pattern. We were in the bottom two floors here of the Fibonacci grid. Despite that, it shrugged that off, once again illustrating relative strength. That leads to a melt up and overshoot. So you should have started taking money off at 11.6 and closing out. And in fact, in the end, we touched 12. Very interestingly, so for those that like the fib methodology and recognize that, it's a 1.618 run, which is a golden mean, and it had a little stab through the magic number of 12. That means Ethereum had gone, from sub ones, even 8.5s at these levels, all the way up to 12. That's a phenomenal bit of work rate there on the upside. You could expect rest here, and I'm watching it as we're going. This is live chart, by the way, so you can see it pulling back somewhat. So the original targets taking you off at 11.6 here would have been a very, very good level, and you should always get a slight amount of overrun, particularly if you're getting this level of impulsiveness. There is a point where it ends, and the natural geometry of the patterns give you a hell of a lot away. If you think you're learning a lot from these YouTubes, by the way, I'm afraid you're not getting a fraction of what's out there for, to be learnt. And I would certainly say, if you're interested in this, it's worth getting in touch and having a chat on support at the Market Sniper, or better still, go to the Market Sniper webpage if you like, and there it is. And you can use the contact us part of the page. It's to the right. I haven't done a framing particularly well here for the video, because I wasn't intending on showing the blog. But just to the right of the blog here is the contact us button. I've struck it, and you can book in for a chat if you'd like to do more on that. But anyway, I'm giving you a market update. I'm not here to for aggressively doing anything else. So the Ethereum has done great. It's performed well. And you could expect underperformance for a bit now. So it sold off quite brutally after having done a lot. It's not unrealistic for a 30. If we do a fib from the point of impulsiveness, and some of you might ask, where might levels be? So let me give you that for free in terms of an opinion. How far might we pull back? Because you're now sitting long Ethereum. My viewpoint is I've rotated into Bitcoin, which is slightly more defensive a play, because I'm expecting what I call progress decay. Progress decay is like options, in options where you have time decay. Time goes away without any major price behavior that adds profit. In other words, it can pull back, taking away profit, or just churn up and down and up and down and be nasty consolidation. In other words, not good for your current position price behavior, either pullbacks or churn. And of course, you're sitting on risk for longer, where potentially you could have a full-blown pullback. So the 50% would bring it back to the second interim, which is already identified as a key level of significance and is also right by the previous high, which might have been deemed resistance, now turned support. So you quite easily could have a 50% pullback. It's even beyond, not beyond the realms of possibility from the highs here to even have a pullback. This is quite high vol. But it's it's a Saturday evening. I'm not sure the amount of people on cryptos will be the highest. They'll wake up on Sunday and we'll see what they do. There might be a bit of profit taking, so you could come back down. Any old how? That is the news. So a couple of things I want to apologize for. My new crypto YouTube channel, I made a bit of a pig's ear of, and I'm going to get the branding right second time round. I couldn't even remember the name myself, so how I expect you guys to find it. So I've sacked that channel and I'm starting another one. Please sub. I'll put the link in this video when I upload it. Give me a chance to get it up, and it is going to be the same as my Twitter handle for all things crypto, which is the Crypto Sniper. So go to, this is my Twitter handle. That's your Rothschild's 1988 Economist magazine saying 2018 world currency. I thought you might like that, a little bit of, and you know what, who's planning what. And so follow at the Crypto Sniper on Twitter, and then look for the same name, and I will post a link in this vid on YouTube, and that will now be the channel where the crypto specific will go out. So with that, love you and leave you. Enjoy your Sundays. Remember, don't get too fascinated with the trade. Get in, get out of the house, go play with your kids, go walk in the park, go ride your bike. Lifestyle trader. Oh, by the way, on that phrase, one last point. I've actually set up an amazing course for folk, 18 steps to a lifestyle trader. That's an hour a shot, 18 hours fractured into 15 minutes. In other words, segments you can easily consume. Incredible course breakdown all through the new Kajabi platform. There's a welcome video. This is what's in it, by the way. Your psychology, your mental, full hour on that in 4 15-minute clips. Why we trade continuation, how we do key levels of significance, the squeeze and the pinch, the massive gift of volatility, the £1 million challenge, by the way, which I'll be looking forward to bring forward and probably do in the crypto markets. I've been waiting for the opportunity to launch that one. You'll love that clip and you're all going to want to play that one. HVF, volume, OBV, why we use those inverted, the 5 stages of a breakout. Wow, this is a content-rich program and it's amazing. You can watch it over and over again. Zip through it once, then watch it with pen and paper. You're going to come out smarter about that which we do. $797, 18 hours that could put you in a position to exploit this amazing crypto market. The uniqueness, we're at a unique point at the moment. We have an incredible trend and continuation trading strategy that you would get presented in this program, and you're at the intersection where this particular training and the crypto markets meet. And markets that will give you an organic expansion of 300% plus in even the majors like a Bitcoin or an Ethereum, you can get a 5x, a 10x on that. And this little program, you'll love it and you'll be able to get onto it. Even better, if you can stretch the HVF Trading Metamorphosis program, get in touch about that. And you can book in here to discuss that just to see whether it's suitable for you. And that is holistic, and that'll include our base camp and everything else beyond this course. But let's just say, hey, you just want a starter and you want to have a taste of what we're all about. You'll enjoy this program. Excellent. Get in touch on support@themarketsniper.com if there's anything else you want. Enjoy and play safe. Watch for that Ethereum. This was the final chart. The one before was the one we threatened it would do, which was that. We expected slightly more of a pullback at the second. It's been exceedingly good. You know, I don't like to I prefer to understate and have things over deliver. And what we ended up getting, and we should probably do this in green, is bang, that all the way to 12. And now we're getting an equally sharp sell-off because of the nature of the run-up. But there wasn't much need for consolidation. We did have a slight pullback here, but it was nothing like what I thought might need a little bit of a wind-up to get home, because we broke from quite low down on the fib, and in actual fact we just got a small dip down and then we carried on up as per this red arrow. So yeah, interesting scenario cast, but we did make the target. That was the important bit. Just doubly quick. Hey, it's a Saturday night. It's 2:22 here in London. Just had a glass of wine and a nice meal with a friend, and the job was done. Isn't it great? Breakout trading. It's time. This is an opportunity, I believe, for folk to sincerely really make a fundamental difference to their financial standing. And I'm not a sizzle seller. If we're talking about the normal FX markets, I'm far more conservative about expectations. It's just a unique intersection at this moment, and I think if you can, you should exploit it. With that, I love you and leave you, and have a great Sunday.